Hello everyone, today we're going to be doing a trade breakdown of a trade that I did on November 19th. I chose this specific lecture to break down because there was lots of parts to it which led to it being a high probability trade. But just before we begin, I have to say that this will be the last trade breakdown or a weekend review that I'll be doing on YouTube. I've just started up a new Discord and on there, that's where I'll be posting trade breakdowns and weekend reviews. So if you want to see that type of content, join my Discord, because we've got a real good community in there that you can talk to, and if you've got any questions or need any help, then I'll be answering most questions and I'll be trying to help all of you out. Before we get into the breakdown, I'll show you the execution. I hope you guys had a few questions while watching that, because all those questions will be answered today. As you can see here, we were accumulating in a tight range. This tight range is our accumulation phase. Once we sweep one side of this range, then we would expect the other side to get raided. Once we trade out of this range right here, we're now expecting the opposite side of this range to get hit. What I want you to notice is this is the hourly open. I want you to see how there's barely any manipulation up on the hourly open. Make sure you remember this because this is very important in the future. If we carry on down, as you can see, the opposite side of the range gets hit. But what's interesting about this is how we never even closed the candle below this low right here. This is what got me interested, because what I want you to see is, as you can see, we are inside of our macro window. This is our time of interest that we're expecting a higher low to get formed in. What I want you to notice, guys, is during our macro window, this grey box is a 30-minute cycle. If you don't know what time cycles are, watch my time cycle lecture, because these specific times are super important in our trading. What I want you to notice is how NQ made equal lows. If you take a look over at ES, look what ES did. We swept our 30-minute cycle low. Now this is SMT inside of our time of interest at a time-based liquidity pool, which makes it what? It makes it a high probability SMT. If this SMT holds and we see distribution to the upside, then we should be expecting a reversal and this low not to get taken out. Another thing to notice is our midnight opening price. If we jump up to the 1 minute chart, I want you to see this. Look at this one big black candle. Do you see the whole range of this candle? Look at the next candle that opens. We sweep this low and this candle's low, but look at what happens. We close back into the range of this black candle. Why is this of any importance? Well, this is a 3-candle model. I might make another video on this, but this is very interesting. You usually use this at a higher time frame to frame setups, but when you start to spot to see this is super important, because this setup right here is super high probability. Now if we drop back down into the 15-second chart, this is what I want you to notice, is if we play it forward, I want you to see how we distribute up and close above this CB. This is important because this is our CSD. After we close above this CB right here, this is the change in state of delivery. If you want to be safe, you can also, as I mentioned in my last lecture in CSD, you can get a close above this high right here. This high, as you can see, was formed inside of this SIBI, making this an intermediate term high. Once this high gets taken out, we have switched from a sell program into a buy program. Now, if you remember back when I said why this black candle is important and how we never got manipulation above this candle, the reason why this is important is because this candle is our hourly open. Every candle that you see in front of you, doesn't matter what chart, 1 minute, 1 hour, daily, weekly, monthly, it doesn't matter. Every candle has a manipulation and a distribution. This is what forms our wicks on either side. This is our open, low, high, close. If we don't see manipulation above an hourly open or a high time frame candle, we can expect manipulation to take place later. Then if we see this hourly open acting as support, this is a high probability that we are going to continue to the upside. This candle was also why it entered on, because what I want you to see is how the opening price lines up with this breaker right here. This green candle is our breaker. Look at how the opening price perfectly lines up with this breaker. This is why this breaker was so high probability. If we keep fast forwarding, as you can see, we start dancing around our opening price. Now, why don't I mind that we're just dancing around this? Because usually this would not be a good sign. This would usually mean that a reversal is taking place and we're going to carry on to the downside. Now, why do I know that this was not going to happen? Because of everything I mentioned earlier. This CSD, this SMT, during our macro time, at a point of interest, was why I knew that we were not going to reverse down. We had no need to reverse down. Now, for my target, why do you think I chose to target this high right here? Because if you watch my first time cycle lecture, as I said, we go from time cycle low to time cycle high. This is why this high was a high probability that is going to get taken out. It's because of the time that it got formed. As you can see, if we keep fast forwarding, this high gets smashed through. If we jump up to the 1 minute chart, this is much clearer to see. If we keep fast forwarding even more, I want you to see how this candle gets utilized. As I said in my previous lecture, once a time cycle high has been broken through, we should see it acting as support on price. This is exactly what we see on this candle right here. This candle digs into this candle's high and it rejects. This gives me even more confidence that we are going to carry on up and I should keep my position open. But then you might be saying, okay, but there's no price action above this level. What do I do? Well, that's what we use standard deviation for. If we pull a standard deviation from here to this high, I want you to see something interesting. The levels we focus in our standard deviation are 2, 2.5, and 4 and 4.5 standard deviation. These are the levels we should be monitoring. So if we keep fast forwarding, as you can see, we start accumulating again. Now I don't have a problem with this accumulation because we are waiting for our next time cycle to open to distribute. Now, we're watching for reactions off of these standard deviations. As said earlier, the standard deviations we're watching are 2, 2.5, 4 and 4.5. If I draw out 2.5, which is our important standard deviation that we're going to be using now, as you can see, for the moment, we're using it as support after we've broken above it. However, if we carry on, as you can see, we start distributing below this 2.5 standard deviation. Now what's interesting, look what happens. This candle is our next hourly open. Look at how we open higher. If you watch my execution closely, I noted on the chart that said only if we open lower that I'll be adding into my position. As you can see, we open higher, then we distributed down. This is an open high, low close type of candle. This hourly candle was made to distribute lower. So as soon as I saw this candle close below this low, this is when I got out of my position, because this hourly candle does not look nice to me. This hourly candle was designed to distribute lower, not higher. So although my full objective of the hourly CIBI was not reached, that does not mean that we're going to carry on higher. Because if you look, what time did we form this high? Just after our hourly open during our macro time. This is why I got out of this trade. If you guys wanted to be greedy and hold on to this trade, you would have burnt yourself. Because if we keep fast forwarding price, as you can see, once we fail to close back above this hourly open, look at the distribution that happens. Markets are so easy to read, but it's just knowing the information and utilizing it in your trading. Once you start seeing all these simple things line up, your entries and exits will have so much precision that you'll be shocked. So with all that being said, guys, I think that'll be enough for this breakdown. As I mentioned earlier, this will be the last breakdown I'll be doing on YouTube. All the breakdowns and weekly outlooks will be on my Discord. So if you want to see more of them, join my Discord. There's 80% off Apex evals in my description, so if you want some of that, go into the description below. And all the indicators that I've used today, I'll link them down into the bio as well. Hope everyone has a good rest of the day, and goodbye.